The Institute for Financial Literacy is a collaboration between MoneySense, the National Financial Education Program, and Singapore Polytechnic International. The Institute is the outreach arm of MoneySense. We conduct free and unbiased financial education programs for the public. MoneySense is Singapore's national financial education program set up in 2003 and is currently overseen by MAS, Monetary Authority of Singapore, and MOM, Ministry of Manpower. MoneySense aims to help Singaporeans manage their money well and make sound financial decisions on their own. Understanding basic health insurance. This is the first in a series of 2 videos, and in it, we will cover understanding health insurance and types of health insurance. Understanding health insurance. Health insurance helps to reduce financial loss as a result of an accident, illness, or disability. It provides an income while you're disabled or in hospital, and it can also cover the cost of your medical or nursing care. According to statistics, the top 3 causes of death are cancer, pneumonia, and heart disease. These are the common health insurance terms that you should know: policy limits, coordination of benefits, policy exclusions, waiting period, deductibles, and co-insurance. Understanding policy limits. There are 2 types of policy limits: age limits and claim limits. Age limits mean coverage for whole life, a fixed period of time, or up to a certain age, while claim limits refers to the portion of your medical bill that you can claim. Maximum applicable limit is based on the types of expenses, illnesses, disabilities, and duration. Coordination of benefits. When you're covered by more than one health insurance policy, the law allows insurers to follow a procedure called coordination of benefits to determine how much each policy should pay when you have a claim. The combined payments of all plans will not pay more than 100% of your actual expenses. Policy exclusions. Policy exclusions are conditions or circumstances where benefits will not be paid. Pre-existing conditions, illnesses, or disabilities you had before obtaining health insurance are usually excluded. You must declare any illness, disability, or medical condition you have or have had when you buy the policy. The insurer will then decide whether to cover that medical condition. Exclusions vary from policy to policy. Besides pre-existing conditions, look out for other exclusions. Read your policy document carefully to find out exactly what you're covered for and what is excluded. Waiting period. Most health insurance policies impose a waiting period of between 30 to 90 days from the approval of cover. No benefits will be paid for illnesses arising or treatments carried out during the waiting period. Understanding your deductibles. A deductible is the initial amount you have to pay for your medical expenses before your health insurance makes a payout. You usually need to pay the deductible only once in a policy year. Plans with lower premiums usually have higher deductibles. What is co-insurance? Co-insurance is the amount you have to co-pay after you pay the deductible. It is usually expressed as a percentage. For example, if you have a co-insurance of 10%, you will have to pay 10% of the claim amount after paying the deductible. Here's a case study on John's medical bill. John's bill size is $11,000 after subsidy. His claimable limit is $11,000, while his deductible is $3,000, and with a co-insurance of 10%. How much does John have to pay? John has to pay the deductible of $3,000. He then has to pay co-insurance of 10% of the claim amount after the deductible, which is 10% of $8,000 or $800. John has to pay a total of $3,800 and claim the balance of $7,200 from the insurer. Types of health insurance. There are 5 main types of health insurance: medical expenses, hospital and surgical plans, hospital cash or hospital income, critical illness, disability income, long-term care. Medical expenses and hospital and surgical plans. Pay medical expenses incurred as a result of an accident or illness. Include a waiting period, during which medical expenses will not be paid unless they are related to accidents. Practice coordination of benefits, which means such plans will only pay up to the actual medical expenses incurred, regardless of the number of policies you have. Have claim limits. For each illness, each treatment, per year or lifetime. Have exclusions, which means treatment of certain illnesses may be excluded. Have deductibles and co-insurance for some plans. Hospital cash or hospital income. If you want to receive a fixed amount of cash each day while you're hospitalized, you should consider purchasing hospital cash insurance. Hospital cash or hospital income plans provide cash income for each day you're warded for either treatment, surgery, or both. Have waiting periods before the benefit is paid. Waiting periods and benefit limits vary across policies. Have claim limits which will be applied, and the policy will end once the lifetime limit is reached. Critical illness plans. Critical illness insurance pays you a lump sum if you're ever diagnosed with a critical illness covered by the policy. These include major cancers, heart attack, kidney failure, stroke. Critical illness insurance pays a lump sum if you're diagnosed with an illness covered by the policy. Pays only if the illness or surgery meets the definition stated in the policy. The Life Insurance Association, LIA, has standard definitions for 37 severe stage critical illnesses. Includes a waiting period for specific illnesses or types of surgery. If any illness is diagnosed or a type of surgery is carried out during the waiting period, no benefits will be paid. Payouts depend on policy type. Early critical illness policies pay a smaller amount for earlier stages of illnesses, for example cancer, or make several payments upon diagnosis of different insured critical illnesses, subject to the sum insured or policy limits. Disability income. Disability income insurance pays you for the loss of income due to an accident or illness. The policy helps to ease your financial loss, but will not completely replace your income before the accident or illness. Disability income plans. Pay a fixed amount each month to replace the income you lose if you're unable to work due to an illness or accident. Can cover you up to age 65. Stop paying or reduce once you can start work again. Reduction in benefits may be in proportion to your recovery. Have a waiting period of between 30 and 90 days from the approval of cover. No benefits will be paid for illnesses arising or treatments carried out during the waiting period. May have different definitions of disability among insurers. Clarify with your insurer how disability is defined in the policy. Long-term care. Long-term care or severe disability plans pay for the care you need if you're severely disabled. They pay a fixed monthly amount for long-term treatment upon the insured's inability to perform a number of activities of daily living, such as bathing and dressing. Long-term care plans pay a fixed amount each month towards expenses for long-term nursing care when you suffer severe disability. May only pay up to a set number of years, while some may pay for life as long as you meet the conditions. Define severe disability as not being able to perform independently 3 out of 6 activities of daily living, ADLs, which are washing, dressing, feeding, toileting, mobility and transferring. The number of activities you cannot perform in order to qualify for the benefit may vary from one policy to another. Have a waiting period. Payments will begin only after you have not been able to perform the minimum number of activities for at least a set period of time. Key takeaways. Health insurance helps pay for healthcare costs in the event of an injury, illness, or disability. Be aware of the features and coverage of your health insurance plans. Buy only what you need and what you can afford in the long term. You can check out the link for more information about health insurance.